All right, here is a little standard deviation work and how they help me bank this week. And just like sort of a breakdown of how they can be used. I use them in three ways. We're going to get right into it. So first, we're on the 5 minute time frame. This was yesterday, Friday. Let's start with Wednesday. Okay? So, what is the main purpose of standard deviations, in my opinion? All right. So the main purpose of standard deviations for me are three. One, they show me reversal points. Two, they show me targets. And three, they tell me if we're going to have continuations. So obviously, I do the same thing I always do. I mark out liquidity pools. On the hourly here, we could see very shitty price action right now. We got this low, we got London low, is a swing low, we got this swing low. 30-minute wise, nothing good either coming into open. These are equal lows, so I want to see those get hit. 15-minute, I'm assuming, is nothing. We are tapping and respecting this gap at open. Okay? Now, here's how standard deviations work. What is the current trend here? What are we noticing as the trend? As you can see, we were in an uptrend. We made this high. But what you want to do is mark out the most recent manipulation leg before a trend in pre-market. So for example, we had this strong uptrend, right? And as you can see, we had this leg down before. Now, first of all, let me show you the settings. Take your time, take a picture, copy it. These are the settings you should have on your fib. The 1, the 2, 2.25, 2.5, all that. So hopefully you have that. Now, we go and we look, okay, are there extensions that are lining up with any liquidity pools that I've already marked out? Well, as you can see, the swing low that we have lines up with the -1 pretty well. And then, of course, this high that we edged is around the 2.25 and 2.5 level. Now, since we're at all-time highs, I'm usually going to be bullish. And as you guys know, I like to look for AMD models, so I like to look for manipulation and then a long or a setup to our draw. So because we have a high here and we're bullish, I'm already thinking this is a good draw on liquidity. But here's the first use of standard deviations. This high also, what did I just do? This high also lines up with a standard deviation, giving me more confidence to use it as a target, using as target. So that's number one. Now, like I said, this is pretty shit. So let's talk about now. As you can see, we sold off pretty high, pretty hard. We had this uptrend. There was nothing really key here that, is going to make or break it for you. And I would say just go for, like, the most obvious leg. Like this, not a crazy obvious leg. It still has then the -2 getting close to this low and the -1 with London low. For me personally, I'd probably want to see a sell-off and kill all of this. So what happens at open? Okay, so at open, we start pushing up to this. Oh my god, I'm fucking tripping. What am I doing, bro? So, I'm not even at open yet. I'm a dumbass. So, we actually inverse this at open. So, now, what am I assuming? Immediately, I'm assuming, okay, now we have this uptrend. Where's the standard deviation or where's the last leg down? Boom, it's this guy right here, right? Because now we have an uptrend. What are we getting now? We're getting a -2 right over here. If you go over to the -2, is there anything lining up on the hour, on the 30-minute? No. There is a 15-minute gap here with a low, so we could potentially see that get taken out. Now, now we wait. Let's see what happens. Here's open. We're obviously going to want to take this. We edge this, which gives me more and more confirmation that we're probably going to make a move down here, take some of this liquidity. Can this get the fuck out the way? Take some of this liquidity here, maybe this low. I'm really liking this low or this low. So really all it is just now, okay, can I get a setup off these lows that I want to hit? Now what the fuck? Now we've hit a 5-minute, so we edge that low, and we just hit this 5. So now the question begs, do I want to take a continuation out of this? Boom, we get this death candle. I'd probably enter in like that, stop above the high, and then I would go 1-to-1 with this low, and then we do have equal lows and stuff like that. I'm always going to take partials at 1-to-1 or even full, and then you can leave runners for these targets, right? So TP1 gets hit, and then what happens? We start inversing this 5, I believe. So that's part of my continuation model, and bam, now we're probably going to do what? We're going to hit this target standard deviation. Let's see. Boom. So now we hit it. This is now a standard deviation, and now that has been hit, as you can see. 2.25 has been tapped, paired with liquidity. This is also, I forgot to mention, the standard deviation level always has to be paired with liquidity. So you mark out your liquidity first, like these lows, and then you see, okay, if there's like a -1 or a -2 or a -2.25, the -4 is the full extension. There's nothing that should go past 4. So if we are displacing through 4, -4, brother, we are not getting a reversal. So so when liquidity lines up with these standard deviations, just more and more confluence for a reversal. And now the target has been used. So now we're going to see, is this a reversal? Which basically, would just be the same thing that we do. What time did this happen at? Right around 10 a.m., as you can see. So what happens? We sort of just accumulate for a bit over here. Not really doing much over here. Then right at 10 a.m., what do we start doing? We push up to the obvious liquidity pool. And now we're getting shorts off of it. Let's see if we get a 30-second short. Okay, we make a... Okay, this is a pretty terrible price action. Waiting for just like a death candle to the downside. Okay, so now, this is important. We are lagging or not getting a clear reaction and entry model off this standard deviation. So what does that tell me? Now it's time for the third confluence. That tells me that we are not going to reverse off this level, and now continuations are valid. So what do I want to see? I want to see us tap into a gap. Of course, we don't really seem to do that here, it seems. We make a 15. We miss it. Now we tap. This will probably continue long to a new high. Yep. So I probably wouldn't take this 15. It's a little too premium for me. But what I like to usually say is if we start displacing or closing above, like on the 15-minute, this is a 15-minute high. And as you can see, we got a body close above the 15-minute high, which is paired with a standard deviation. That's the third confluence that we can now look for continuations. So 1, they're good for targets. 2, they're good for reversal points if you do reverse off of it. And 3, they are good for confirming that we are just going to trend all day and getting continuation longs. So that was Wednesday. So now let's go over Thursday, where we're going to see one of those reversal examples. So what are we doing here? We made this push up. Oh, sorry, I should probably mark my liquidity first. So let's go on the 4-hour first. Is there anything striking? It looks like we're respecting this 4-hour gap. We have this high above right here. We swept out this low. So now we're starting to move around this low, which is low of day. We go on the hourly time frame. Nothing amazing, but we'll see. We got this low right here. And then Asia low down here, some other lows like New York low, etc. So then 30-minute, what are we doing? We're currently inside of a 30-minute, respecting it. See if we end up respecting that at open. And then 15-minute wise, same deal. So then we go to the 5-minute and we mark our standard deviation. So we got this huge bull run. So I'm going to mark out the standard deviation. And what do you know? What are we getting a beautiful level off of? Asia high. Right at the 3 standard deviation. We also have this high at the 2.5 standard deviation. So I want to see us run both of these. And if we can reverse, then that's money. As you can notice as well, we are accumulating right now on the 5-minute. So this would be a valid AMD for my system. What happens at open? Now we start pushing. We've opened up a 5. Boom. As you can see, holy shit, bro. I think I'm dying. This is what I want to see. But remember what I said about the 15-minute? I said, are we going to displace and give us continuations or no? Boom. Look at the 15-minute wick, bro. Class. So what do? We open up a unfilled 15-minute down here. We also have some unfilled 5s as well. Lower even. So now what do I want? Now that we're reacting off Asia, I want to see an inverse to the downside. Boom. Let's see if there was a 30 so that I could get a better entry. No, there wasn't. That's pretty unfortunate. So now there's two ways I could go about this. I could just take this short and just go break even at the 15 and just put my stop tight above the candle. Actually, I am just going to do that. And then I'll take partials at 1-to-1. And then, like I said, targets. Our standard deviation levels have runners going all the way down to here. I believe this was a data news candle. Yeah, it is. So I would probably just want to see us get at least to here and here. But remember, we always have to be cautious of ES and what it's going to do. So now let's see. Do we get break even? Okay, so TP1 gets hit. As you can see, I have my stop above the candle on this displacement. If I wish we could have got a better entry, then I would have put it up here. As you can see, that's kind of pretty shit. But even if I did want to do that, it looks like we would already have hit 1-to-1 right there anyway. So that's cool. Yeah, look at that. That's perfect. Beautiful protection point right there. So now we're flushing. Let's see if we hit our draws. Let's see if we go break even. This is an important lesson I'm about to teach you guys. Why are we reversing? Because this is the low right here. This is the low on ES. What did we do? We took it out on ES. What is that called? An SMT. So what do we do at an SMT? We either exit or we trail aggressively. Let's say I trail aggressively. Boom. Runner gets stopped for 3.38. By the way, let's go to the trading journal. Very solid trade here. 5-minute continuation on Wednesday. And then right after that, Thursday, AMD short, 1 minute, same exact thing. I actually put my stop above the high here, I guess. Interesting. Maybe I probably got a better fill. And yeah, exit, everything like that. So what do you know? We're 2 for 2 with just playing out what ended up happening. So this is obvious AMD. We accumulate. We go down an edge, an obvious low at open. Then we go up and manipulate into a standard deviation, which remember, I said they can be used for what? Are we going to continuation? Which remember, we didn't displace through the high, so bam, that's one thing. We're not gonna continue or displace through it and get continuation long, so we're probably gonna reverse. Are we gonna reverse? Number 2, bam. Amazing wick and our entry model off the level, so that's 2. And then 3, remember, for targets. So if I were like a swing trader, I could leave shorts for the end of the day, but personally I wouldn't do that. So let's see if that ever ends up hitting or if we just reverse. Boom, we come back up. This is the -4 standard deviation, so this would be the full extension of the fib. Boom, see how we tap it to a T and then start selling off again? Exactly. So that's the full extension of the fib. Pretty powerful stuff. Obviously, I only am going to trade my model with this stuff. It's not like this is my model, you know. So what do? We tap it. We get an inverse, but not an obvious AMD for me. What's it called? There's no obvious time AMD for me. It's not a continuation, and there's also no liquidity over here. This is just a random level, so I wouldn't take that. But hopefully you guys are understanding just how fucking insane these standard deviations can be. If you actually have knowledge, this is the key part, if you have knowledge on drawn liquidity, and if you have knowledge on what's it called? On liquidity pools and your entry model. Let's do one more. We're going to do Friday now. This is the trade that I took. Boom. What are we doing? Well, we're in a downtrend, Jack. All right. Let me go on the 4 hour or the 1 hour. I'm just going to skip because I already took this fucking trade. So we have a 1 hour right here. We have a 1 hour right here. 30-minute wise. We have no prominent lows, just overlapping gaps. And then 15-minute wise, we have a 15-minute intermediate low inside of this 1 hour gap. So, I mean, this shit should be begging you to take it at this point. So, what do we have? We have this uptrend leg, which is, you know, fine. But what I'm more concerned about is this uptrend leg. As we started selling off, and then we pulled back right before open. So as you can see, we had this uptrend. We're clearly in a downtrend, so we had this up leg that then what happens? We have a beautiful standard deviation on the first hourly, and I mean, this is the perfect one. 3 standard holy shit, standard deviation with a 15-minute intermediate low with an hourly gap. And what do I trade? I trade AMD. So what do I want to see? I want to see accumulation pre-market. As you can see, we're not really making any major moves, and I want to see a sell-off. What do we do at open? We fucking miss the hourly, or the second hourly gap. You could have taken longs out of this first gap, and you could have done pretty well for yourself. But me personally, that's not what I want to see. I wanted to see the lower one get hit. Why? Just more of the range getting hit, better standard deviation level. I mean, this is in the middle of nowhere. And just regularly take the standard deviations out of the equation. I'm still going to be, if there's 2 hourly stacked on top of each other, I feel more confident when both get ran. So then what happens? Remember how I like 10 a.m. AMD? Well, what do we do here? We accumulate, and then we manipulate down into our lower gap. Finally, what do we want? We want a entry model, which would be the 1 minute inverse. Here's a 1 minute gap. Here's a 1 minute inverse. And then you could do your stop wherever you want. I actually want a little tighter pause because I wanted this 5 minute to get hit. So I actually entered a little later. What time is it? It's about to be 10 a.m. So what's going to happen right at 10 a.m.? This is a key thing. Boom. We're going to open up a 5 minute fair value gap. So I know we are at least going to get to this. So boom, I'm waiting for 10 a.m. Or I could have just entered just now. And what do you know? We absolutely rip. And where do we rip to? It's a good question. This is 10 o'clock AMD, by the way. This is an hourly tap. This is liquidity. This was another example of it being a reversal with my IFEG entry model and my AMD. Boom. We have a 1 standard deviation lined up perfectly with high of day, so that would be a good target. Boom. Okay, boom. And notice how, right when we get to that standard deviation, we have a huge volume spike. The market wants to go for these. So it takes out all of them, gets a wick off these levels, and then retraces and then keeps going. So that's how you use them for different ways. But most importantly, you should remember to just stick with the 9:30 and 10 o'clock AMD and the continuations, of course, and you know, mark out your liquidity and then just use them as a confluence. All right, these are not do or die levels, but they are very, very good and give you more confidence in a reversal setup or in continuations if you're displacing through them, as well as good targets to use. All right, peace.